And so this one, we're going to go into it blind. Weekly time frame, here we go. So on the weekly time frame, it is clear to see that we are bullish. We've taken out the previous high, previous high, previous high. In fact, it is so bullish, in fact, that it has created this liquidity void, an area of liquidity, an area of, sorry, imbalance that needs to get filled in. But what was it that created this area of imbalance, this liquidity void? It was this final sell to buy candle. So this little bearish candle right at the bottom, that is what led to a complete break of structure. So therefore, I expect price to revisit that level so that the banks can break even on their sales, because right now they're in a hell of a lot of drawdown. So therefore, my institutional order flow bias is that the markets are going to come down to that particular candle and to fill in the void that it has created. Okay, but because we are in a bullish environment, structure is bullish, I can't just click sell on my MT4, right? I've got to wait for a break of structure. So let's really investigate what's happening here and really break it down. Okay, so let's go to the 1 day. So on the 1 day, this is significant. We're actually seeing a potential reversal. See how this bearish candle comes down? It's not enough to determine bearishness on the daily because our low is so much lower. However, it is a good sign that market is starting to come down. Again, let's go break it down to the 4 hour. Okay, this is significant. On the 4 hour, we have actually broken the previous low. As you can see, that was the previous low, confirm it on the line tool. As you can see, we broke it. So therefore, as far as the 4 hour is concerned, we've broken structure. We are now in a bearish environment. And that matches our confidence for our institutional order flow. Okay, but it's not enough for us to just enter. We've got to look for the refined entry. So let's break it down again. So go to the hour EM. Okay, this is significant as well because it turns out that that wasn't really the break of structure that initially took place. The initial break of structure happened right here. You see this candle here, it closed below the previous high. If you look at it in a nice graph and line tool environment, you see the low, higher high, higher low, higher high, higher low, higher high, and then bang, a lower low. This candle body closed beneath the previous low. Therefore, it was at this moment that structure actually broke. So what candle was it that broke that structure? Well, it was obviously this buy to sell environment, right? You see these little buy candles before the big move down. This is where the banks were getting in their sell orders, as well as inducing the buyers by buying at a support level, okay? And so let's break it down once again, and let's go to the 15-minute and really see what took place and where it took place. And so here you see the true break of structure, right, was this move right here. Because why? It closed beneath the previous low. If I draw a little line tool, you can see body closure takes place below that low, okay? And so therefore, our buy to sell candles took place in this area, okay? So I've got to look for an entry based on this area. Now, the buy to sell was so significant that it led to inefficient price action, imbalance, right? As you guys can see, there is imbalance within this given region, okay? And so therefore, what I'm expecting is for price to come back, react off the buy to sell institutional candle, and also fill in this little pocket of imbalance as well. Okay, let me shade it out for you guys so you guys can see. So that is what I'm expecting for this to be filled in. So once again, I'm going to base my entry on the fill of this imbalance, just like so. Okay, and I'm going to put my stop loss at the top of the candle. Reason being, if it goes any higher, then clearly my point of interest is invalid, okay? And I've got to look for a re-entry or reanalyze. But I'm expecting a reaction off of that line. Why? Because it's going to fill in the IPA, right? Because it's going to react off of the institutional candle, and also because our institutional bias is that it is going to go back down to fill in that liquidity void it created on the 1 week time frame. So here is our entry. So let's draw a short position right here, bang. Stop loss, let's take it to that high point. So a nice little 10 pip SL. Okay, and what about our TP? Remember, our TP is based on a higher time frame, right? Well, where this whole move started, where this whole analysis started was the 1 week. And on the 1 week, as far as we're concerned, we're expecting this entire shaded area, this entire liquidity void to get filled in, okay? And at least react off of that buy candle down there. So therefore, what we're gonna do is we're gonna take our profit to the gap, to the fill of the IPA. And this is a 1 to 112 risk to reward ratio, which is absolutely insane and unheard of, right? Which is why I wanted to show it to you guys, because of how valuable this knowledge is, okay? So let's now wait and see for our reaction. So we're expecting a reaction off of our entry. Let's see on the hourly, bang, there is our reaction. And our reaction perfectly filled in the IPA fill, guys. Check this out. Here is our IPA fill. If I expand it, bang, it filled it in perfectly, reacted off of that institutional candle. And then let's now go back to the daily and see if it makes its move down. Boom. It starts making its move down and filling in the imbalance and liquidity void, smashing take profit. And that is a 1 to 112, guys. That is insane. If you've got a 100K account and you risked 5%, you just made £500,000 in one trade. Insane, right? And then just the cherry on top, it reacts off of that institutional sell to buy candle to then start making its move back up. So that is all from me, guys. With that being said, I want to thank you guys for being on this training. It is not over yet because I have